Hey guys, this is Shuril, and you're watching Modest Millennial, where we talk about all things money that they don't teach you in school. And today, just like the past few weeks, we will be discussing posts from the popular subreddit FIRE, that stands for Financial Independence Retiring Early. And we will be seeing what certain individuals or families or couples are doing with their money, with their finances, and with their life once they have achieved FIRE. And we will try and analyze these posts and try and gain knowledge from these posts, and we will try and apply that knowledge to our finances and see how we can better our finances as well and try to achieve FIRE for ourselves as well. So FIRE, a financial independence and retiring early, basically is a movement of a certain population that is, that are trying to save a lot of money or as much money as possible as soon as possible, so that they don't have to have a stressful job or stressful work or any work, as a matter of fact, in their life, and they can just enjoy the finer things in life, like traveling or just going to the beach, or just spending time with family or spending time with their pets, or just being in an RV, driving around the US and looking at things. And those sort of things take a lot of time, consume a lot of time. And when you have a job you're working at, you don't necessarily get all of that time to yourself to actually go out and manage doing those things. So that is where the concept of FIRE, financial independence, comes into play, where you work hard, really hard, for the early years of your life and work until a certain point in age, which is much earlier than your actual retirement age, which in the US a lot of people retire right around 60 to 65 years of age, right before Social Security kicks in. But the goal for FIRE community is to save a lot of money, save as much money as is required to to pay for their monthly expenses, or their annual expenses actually, and then just not work. That's what the people in the FIRE community do, and a lot of people have achieved great success from doing this. So for today's video, we will be talking about a few different posts. I've already selected the posts that I will be talking about, and I have them open in my browser tabs here. So we will start jumping into these posts and see what these people are doing. All right. So here we are in the FIRE subreddit. So we will first take a look at this very first post that I have selected here. Let's see, sort of a long post, but we'll try and get the highlights from this. This individual says they have a net worth of $1.1 million at 36 years of age, which is amazing, right? I mean, 36 is pretty young, but they've already achieved $1.1 million in net worth. Basically, their net worth is all of the assets they have, right? So any sort of savings in bank, any sort of if they have a house, that's calculated in your net worth. Whatever equity you have in your car, that's your net worth. Any sort of investments, 401k, Roth IRA, brokerage account, cryptocurrencies, any of these things that are tangible in nature, that you can go out and sell and gain money for, are considered your net worth. Your liabilities are actually not your net worth. Your liabilities are something you owe money on. So if you have liabilities, you have to subtract that from your assets, and that's what becomes your net worth. So yeah, so let's keep going here. So net worth of 1.1 million at 36, which is great. Trying to walk back lifestyle creep. Okay, I'll explain what lifestyle creep is here in a bit. So they go on to say, I consider myself extremely fortunate and lucky to have graduated university in 2007. Crime and night classes. I did all the right things early, put as much money as possible into my 401k and Roth, and saved up for a house down payment by 23. That's awesome. My career and opportunities started to really take off, so I had to move around the world twice. I had to sell my house at 26. That kind of sucks. Okay. I tried to keep up with the saving mentality through putting my bonus towards student loan debt, paid off by 27. Okay, that's not too bad. And maxing out 401k contributions. Unfortunately, during that period of rapid growth, I got swept into an expensive lifestyle and hobbies. As I hit 1 million net worth a few months ago, it made me reassess everything and reflect how I went off course from my original mentality. Now I'm working through the right balance of spending to get back on course without drastically changing my lifestyle all at once. So they've given a breakdown of what they're doing to get rid of lifestyle creep. So before we start reading into this, let's just talk about what lifestyle creep is, right? So a lot of people of my generation, right, of our generation, millennials in general, we grow up, we go through college, and then right after we finish college, if the job market is good and you're good at what you do, you basically get a decent paying or a high paying job right away, and you suddenly have all this money coming into your bank account, into your life, that you have no idea whatsoever what to do with. So you what you do, right? I mean, you basically go out and spend money, right? I mean, you only need so much money to live on a monthly basis, and you have this excess of money that is still in your bank account that you don't know what to do with. But now you think that you can afford certain things in life, like you can afford the fancy car or you can afford the fancy leather jacket, so you go out and spend that money, and that's what a lot of people do. But where lifestyle creep comes into play is when next year, when you do a good, when you have performed good at your job over the past year and you get a promotion or you get a decent bonus for performing well, a lot of people go out and use that money to buy even fancier things, because all of a sudden now the slightly more expensive car becomes more affordable because you have 10 grand more coming into your bank account just because of the promotion or just because of the bonus you just received. And then that keeps going on where, at certain point, after getting like 3 to 4% or 2 to 3% in raises every single year, you have reached a point where your income, say at 25 years of age, is say 15 grand higher than what it was 20 years of at 20 years of age, right? So to match that extra income, a lot of individuals go out and make larger purchases, such as, their house needs to be bigger than what it was at the age of 20, or their apartment needs to be fancier than what it was at the age of 20. And it doesn't really need to be that way, right? I mean, lifestyle creep is such a bad thing that erodes away the growth potential your money has. So if you were to just every single year, whatever promotion you got or whatever bonus you got, if you were to just put that away into your investments, your money would grow so much faster, and you would get wealthier so much faster. There's really no better thing than really watching that money grow. Once it start hitting a certain point. So so yeah, I mean, I would try to avoid lifestyle creep. I mean, I was similar to what this guy was doing here. Looks like I was obviously not making as much money because I haven't still reached that sort of a net worth. But right out of school, I bought a fancy car. I changed apartments several times in the past 10 years. Every single time I needed the new and the most fanciest thing. And I was always buying fancier clothes. And all of that really plays a havoc on your finances. And yeah, it's just a bad thing for your life in general. So let's see what this person is doing to avoid and get rid of and get out of lifestyle creep once they have reached. Well, let me just say that even with having lifestyle creep, reaching 1.1 million by what 36 years of age, that's still not bad. But just imagine if they didn't have that sort of lifestyle creep that they're talking about, they would be much more wealthier at 36, and they would have reached the 1.1 million mark way sooner in life. So let's see what they are doing now, right? So they're planning on selling some of the cars from 6 down to 4 to start. Holy cow. I'm not sure why they need 6 cars. Maybe they have a business or something, as the associated upkeep costs are the expensive part, not the car itself. They are all old cars from the 90s. I just have an affinity for they just have an affinity for vintage cars. Fortunately, due to crazy used vintage car market, I actually broke even selling 2 cars recently. Okay, so they got lucky with this because, first of all, I mean, the cars are basically machinery, so over time they're just going to depreciate and lose value. Vintage car market, yeah, I mean, you can probably get a decent amount of money for an old car, but it's not always guaranteed. But just because of the used car market that's going on right now, I mean, used car prices have jumped up like 35% over the past year, and because of that, they were able to break even on a couple of those cars. But I can only imagine where this person must have been parking those six cars, and the kind of money they must have been shelling out to just maintain those cars and get everything cleaned up every once in a while, get oil changes, get brakes checked, get the engine checked, powertrain checked, and everything. And Yeah, that definitely costs money, right? So, not sure where this person is living, but if you're living in a moderate cost of living area, you probably can get by with just one car. If you're living in a city like New York or Boston or something like that that has a better public transportation, you might be better off with that. I mean, you don't even need a car at that point. Other than the car, they are adjusting their tech upgrade cycle from 2 years to 3 years for phones, and from 5 years to 7 years for computer. That's amazing. I think I had made a video in the past where I talk about things I don't buy as a millennial to save more money, and one of the things I talked about in the video was electronics, because you're always going to get lured into buying the next best thing always, right? Because you're making money, because people think, or companies know that once they make a good ad about something where they show something as, say a phone, for example. If you get this new iPhone, it's going to improve your life, it's going to improve your social life, it's going to make you have more friends and go out more and enjoy life, enjoy better things in life. It doesn't necessarily happen, right? I mean, every single year you see that sort of an ad, and every single year you try to upgrade your phone. The iPhone 13 just came out, and I know a lot of people will probably upgrade their phone right around Christmas time, right around Thanksgiving time. It's just gift giving season, but you don't necessarily have to. I mean, my Samsung Note 8 I've been using for 4 years at this point, and I plan on using that phone up until it basically just gives up on me, right? Until that time, I think electronics have come a long way where they don't need to be upgraded every single year anymore. They pretty much are their best they could have been. So I think specifically phones, I don't think you need to upgrade those every single year. So 3 years, 4 years, I think it's decent. You don't even really have to. If the phone, whenever the phone dies, you get a new one. For computers, I guess every computer, once you upgrade the operating system on the computer, it's pretty much as good as new. So as long as you're taking a backup of everything you had on the computer every once in a while and just cleaning it up and starting it up from factory settings, and just you load up the latest and greatest operating system on the computer, I think you can make a computer go as long as you like, as long as the battery on it is working and the computer is performing at a decent speed, and you're only using it for basic work such as browsing the internet, browsing Reddit, watching my videos, and doing some Microsoft Office work. I think you can make a computer last longer than 5 to 7 years. Um, Next is cutting back on eating out down to once a week, if at all. Okay, that's decent. I would say eating out maybe a couple of times a month. I think that's good enough. People spend a lot of money eating out. I think on an average, Americans spend about $600 um, just eating out every single month. So cutting back on that definitely can save you a ton of money. Adjusting my attire for work to be less expensive helps that there is less work travel. Yeah, I think I agree with this point. I've said in the past that I have a select few t-shirts that I typically buy from Target because they cost like $6 a pop. So I get those maybe a couple of t-shirts a year, and that's pretty much what I wear for the entire year. And I work from home, so I don't really have to go to my office, or right now I don't have to go to my customer as often. But even if I do, I have a select set of work clothes that I can keep wearing, and I don't really see a need to upgrade that. So yeah, so I think that's another waste of money that a lot of people spend money on. Then, whenever I have a few thousand accumulated outside my regular savings emergency fund, I'll throw it towards the principal on my mortgage to minimize temptation of spending it. Okay. I Yeah, I mean, it probably works for them. Probably not the best idea what I would do with my money. I mean, mortgage interest rates are so low right now that even if I keep paying mortgage for the next 30 years on a monthly basis, I'm not losing as much money on the mortgage, right? But if I were to invest that in an index fund like the S&P 500 index fund, I would probably get close to 7 to 8% return on that every single year on an average. So I think, yeah, I mean, it probably works for them to throw away towards principal on the mortgage, which is fine. But in my opinion, just probably not the best use of the additional money they have saved up. But hey, they have 1.1 million, so sure, they're probably doing something right, right? No more gadgets or toys without selling existing ones to cover the cost of the new one. Yeah, I mean, I think that's a great way of bringing in extra money every single month. So if you have an old PlayStation laying around in your house, or any other sort of toys or anything that you are not using anymore that's sitting in your house and collecting dust, do me a favor, take a few pictures of it, list it on Facebook Marketplace for selling, and I guarantee you somebody will buy it. I've done that so many times in the past year and a half that it's almost unimaginable what people buy. And as long as it exists and you are charging something for it, somebody will come out and buy it. So it's easy to make a few few $100 here and there every single month just by selling all the crap you have laying around your house that you don't necessarily use. So great post. I mean, I think good luck to this person that has posted this and is working on getting rid of lifestyle creep from their life. And yeah, just stay modest, live well below your means, save as much money as you can, invest as much money as you can. I think all these things just basically go hand in hand with achieving financial independence and trying to retire early, and just living a good life. All right. So with that said, if you are still enjoying this content and if you're still watching this video at this point, please go ahead and like this video, and definitely consider subscribing to my channel, because I post a video like this every single week. Apart from this, I do a market recap video every single Tuesday, and then I try to do another video every Sunday. So a lot of work goes into making these sort of videos. So if you are enjoying this content, I would really appreciate you hitting the like button and the subscribe button. And with that, we'll move on to the next post here, which looks like it's similar to the previous one that we saw, but let's just take a look at it. This person says they hit a 3.1 million net worth at 29 years of age. So see there, they hit a much higher net worth much faster in life than the previous one we saw. The previous one we saw was 1.1 million net worth at 36 years of age. No one to share this with in real life, but if I can do it, you can do it too. Okay. Yeah, everybody can do it. Anybody can reach a high net worth. It's just basic fundamentals that you have to follow. Just things that I just talked about, right? I mean, make money. First of all, you absolutely need to have a source of money, source of income. Be it your job or your side hustle or your business or just selling things on the internet. Whatever you do, you need to have money coming in to achieve financial independence. After that, live modestly, don't give into lifestyle creep, invest as much money as you can, and yeah, diversify your holdings. And basically there's no, it's as easy as that. It's not rocket science. It's basically just live well below your means and you will achieve financial independence no matter how much money you make in life. All right, so with that, let's just continue reading this post. So they go on to say, I know people will first think this post is mostly me bragging, but really just wanted to share how I did it. I think there's a lot of misinformation in finance in general, and most people without a solid background in this area struggle with achieving financial freedom. I do agree with this particular statement here. I think there is a lot of misinformation in finance in general, because what I have seen is that everything in the market, everything you hear in the news, it is basically meant to scare people, so that people can go out and make erratic moves there with their investments, and in turn lose money, and in turn the prices drop, and in turn it creates like a discounted price to buy in for some of these larger institutions. So I think, yeah, I definitely agree with the misinformation in finance, and like I said, it's not rocket science. You could pretty much watch any of my videos or any of videos from YouTubers like Graham Stephan or Meet Kevin, or yeah, so yeah, you could watch those videos and get the basic knowledge of how to invest your money, and how to invest your money with the minimum expense possible. And it's as easy as that. You don't really have to go overboard with having multiple financial planners or having multiple accounts where you are investing or saving your money in, and just making your life complicated just by doing so. So so they say here, if you are reading the sub, you are already ahead of 99% of the population, which I 100% agree with. Because not a lot of people like talking about finance, not a lot of people like talking about the kind of money they're making or how they're investing that money. But I think that talking about money is extremely essential, um, to get ahead with your finances, because it is only and only when you talk about your situation with other people that other people will talk about their situation with you, and you will learn from their situation. And yeah, I think Reddit by itself is a very impactful platform where posts like these you get to read, and of course you get to understand and learn what other people are doing with their money, and get valuable information from it, right? So, all right, let's just see how they have reached the 3.6 million, right? All right, so rewind back a bit. When I was still in school in 2013, I'd accumulated fair bit of savings through internships and odd jobs in summer, working at local golf course, mowing lawns. All right, so this guy's a hustler. They even when they were in school, they were still doing internships and doing part-time jobs wherever they could basically find, and were saving money. Started reading about investing and heard about a company called Tesla. I don't know what Tesla is, right? But yeah, I mean, everybody knows Tesla is the most advanced EV manufacturer, electric vehicle manufacturer out there right now. There's many others, but Tesla is way ahead of the competition. Um, so I became fascinated with the mission and what Tesla could ultimately become. Elon Musk also appeared to be an incredible leader and visionary, aside from an amazing human being. I decided I would pour every dime I saved into the company and hope that one day it would ultimately pay off. And I bet it did, because Tesla has gone up significantly over the past year. So I bet just the investment in Tesla itself is worth a lot for this person. So 8 years later, my initial $35,000 became 1.5 million. Holy wow, that's insane. Was this risky? Yes, I would do. Would I do it again? 100%. Okay. Well, that being said, this is not financial advice. So, if you are watching this, if you are following this, do your own due diligence, do your own research, and talk to your financial advisor before making any moves with your money. Um, but yeah, I mean, definitely the sort of risk paid out for this person. Not to say that if you risk it now, it's gonna pay off for you or me in the future. But I definitely have started investing my money in Tesla at this point. I actually started doing that earlier this year, but slowly and steady, I'm just building a position with Tesla stock in my Robinhood account, and I plan on holding it for as long as possible, and I'll plan on dumping in as much money in stock as possible. So yeah, great job there, and good for this person that was able to achieve that sort of success with investing in Tesla. In addition to Tesla, I've been saving around 50 to 60% of my income and been buying TQQQ, which is 3 times leveraged Nasdaq ETF on a monthly basis. Obviously, this strategy is not for everyone, but if you have the risk tolerance, this fund has generated returns of 40 to 50% annually since 2009. This can create mind blowing returns over long periods of time. The biggest mistake I see young people make is actually not taking enough risk with a long term horizon and investing far too conservatively. Long story short, TQQQ has generated 44% annual returns since 44% annual returns on an average since 2015 for every single year when I began the strategy, which took me where I am today. If you made it this far, thanks for reading my story. I hope everyone here achieves their wildest dreams. Hey, thanks for posting your story. I mean, this is really such a wild post where this individual took so much risk, because I'm not a super risk taker. I'm a super conservative investor. Even though I have invested money in Tesla, it's really not as much as I have invested in the S&P 500 index fund. So yeah, and I plan on keeping it that way. So if Tesla were able to go down, and if I was to lose a certain amount of money, that wouldn't be like playing with my retirement account. But that being said, I think TQQQ, it's probably something worth looking into. I do invest in the Nasdaq index fund FNCMX on my Fidelity brokerage account. But again, that money is also not really that much compared to what I have invested in the S&P 500. Um, but with my S&P 500 investment, what I have made in the past 4 to 5 years is roughly about, let's see here, roughly about 15 to 16% on an average every single year, which is definitely what, one third, one fourth almost of what this person is making with TQQQ. And then obviously their investment with Tesla was, pretty much went to the moon, right? Um, but yeah, I think good stuff here. I think they definitely took a lot of risk with their investment, but it ultimately paid off. And at 29 years of age, they've already achieved financial independence, because if you have $3.1 million in net worth, you're probably able to borrow about 100 grand to 120 grand from the 3.1 million every single year. And theoretically, according to like the guidelines of FIRE, your money will never run out, or you will never run out of your money. Um, so yeah, good stuff there. I don't know what to say on this one, right? I mean, they've already achieved so much. I think I wish them all the luck and all the success in life, and hopefully they get even more wealthier. So that being said, let's go on to the next post. All right, this post is about paying off 40K student loans or keep saving or investing. Okay, so 42K in student loans that I was paying pretty aggressively, 800 per month. Then COVID happens, student loan forbearance still in effect until Jan 2022, and I haven't paid anything since March 2020. Well, hopefully you at least invested all of that money. Currently 26 years of age, 180K in brokerage account, 20K in crypto account, uh, savings 5K per month. Okay, wow, that's good. I know technically I should just pay off this loan and be done with it, but with all the politics surrounding loan forgiveness, I feel like some of it will eventually be forgiven. Curious on everyone's thought on student loans. Good idea to pay the minimum until we get clarity on loan forgiveness. Uh, Interesting one. I have my opinions on this one. Again, this is just me talking, not financial advice. But what I feel like that is that the loan forgiveness uh, debate has been going on in Congress for way too long at this point, and it will probably keep going on for several more years, and nothing major is going to come out of it. And even if it does, it probably will be 5 to 7 years down the line. So if you have 42K in student loans and you're paying 10% in interest on that every single year, that's pretty much equal to what your student loan is worth. So you will end up paying uh, roughly about 30 to 40K just in interest until something really comes out of the student loan forbear or forgiveness debate. So my really recommendation would be just to get rid of that debt, because I think student loan is sort of expensive. Yeah, you have enough money saved up in your other accounts where they can continue to grow, and you're saving a lot of money every single month. So even if you were to pay say a couple grand towards student loan every single month, you would still be saving 3 grand, and you would still be able to invest that 3 grand towards your brokerage and your crypto account, um, and pay off that balance as soon as you can, because that's just going to rack up a lot of interest over time. So I think there's good debt and there's bad debt. Good debt is maybe your mortgage right now, because a lot of people I've seen have gotten their mortgage at less than 3% interest for every single year, and with that sort of interest rate, I think it's easy and it's convenient to just keep paying your mortgage every single month, without paying any additional payments towards your mortgage. And by doing so, you free up a lot of money to invest in the market and buy other assets. And all of those assets, if they grow at like 6 to 7 to 8% every single year, you pretty much end up with more money than if you were to pay your mortgage down aggressively. If you know what I mean, if you understand what I mean here. So I think um, so yeah, mortgage is a good debt to have, or a decent debt to have, and student loan definitely is not in that category, as student loan interest rates range anywhere from, I think it's like 5 to 10%. So that's a lot of money to give away on interest every single year. I think if you were to just pay off that quickly as soon as possible, I think if you were to pay down, say, let's just open up our calculator here real quick. Yeah, so if you were to pay off $2,000 from your $5,000 savings every single month times 12, that's $24,000. So yeah, within like a year and roughly 2 years, I'm sorry, 42,000 divided by So 21 months, so 1 year and what, 9 months roughly, you should be able to pay off your student loans, and then you can go out and invest the entire 5K you're saving um, every single month into the market. So yeah, so I think not that bad of a situation, because even with the student loan, they have so much money saved up in invested in brokerage, so much money saved up in crypto, or invested in crypto, I should say, and then they're still saving 5K a month um, um, from their income. So it's not a bad place to be, really. So yeah, so with that said, thank you so much for watching this video. I hope and I really wish that you got some value out of this video. I know we discussed a couple posts that were really amazing and showed how people achieved a really relatively high net worth. One of them was 1.1 million at 36, and the other one was 3.1 million at 29 years of age. That's really, extraordinary in terms of what most people are able to save and achieve these days. So hopefully you learn from these posts. If you want, I can leave link to these posts for you to go out and read for yourself in the description below. While you are down in the description, definitely make sure to like this video and subscribe to my channel, and check out my free sign up links for Robinhood and Blockfi that I'll leave in the description as well. So that being said, I'll see you again next week with the same format, right around the same time, and you guys have a good weekend. See ya.